The Treasury of Japan may decide to quit managing the yield curve, as the Bank of Japan is now considering whether or not to discontinue controlling the yield curve. This move sets the stage for the adoption of coins, and there is a possibility that the adoption of cryptocurrencies may be disturbed as a consequence of this change. The intentions that Japan has for XRP overlap with the evolving monetary policies of the Bank of Japan. According to reports, the Bank of Japan is allegedly considering the possibility of terminating its yield curve control program, which would be a significant step forward. This may indicate potential upheaval in the financial landscape of the country. This program may be replaced by the Bank of Japan declaring the number of government bonds it wants to acquire, which would be a significant break from the Bank of Japan's conventional strategy. There is a rising amount of conjecture regarding this possibility, and as a consequence, there is a buzz going about among the XRP army. The Bank of Japan is considering the idea of ending its program for manipulating the yield curve. Is it likely that it will begin in Japan? It is important to keep in mind that Japan has declared that all of its banks will start using XRP by the year 2025. This announcement comes in light of Japan's earlier revelation that every Japanese bank is planning to incorporate Ripple's digital asset XRP into its operations by the year 2025. This new development takes on a greater level of significance. There is a risk that the yield curve management program will be discontinued, which is a sign of broader changes to monetary policy. Additionally, this may have an effect on the implementation of cryptocurrencies like XRP. As the expectation for this event continues to grow, there have been concerns voiced over the impact that the rise in interest rates that will be implemented by the Bank of Japan for the first time since 2007 will have on traditional financial products. Due to the market's nervousness regarding the imminent hike in interest rates, the benchmark yield on the 10-year Treasury note has already increased to 0.73. This is a measure of the market's anxiety. The Bank of Japan is currently considering the prospect of shifting its policy from targeting rates to specifying bond purchase amounts. This is in accordance with the current trend that is occurring all over the world, which is to investigate other methods of financing. The move, in addition to this, may create a fertile field for the acceptance of cryptocurrencies, particularly in a country like Japan that has been proactive in embracing digital assets. By demonstrating the Bank of Japan's response to shifting economic conditions, this potential adjustment not only positions Japan as a significant player in the ever-evolving financial landscape, but also demonstrates the Bank of Japan's ability to respond to changing economic situations. The convergence of emerging technologies such as cryptocurrencies like XRP and traditional monetary policies, which are undergoing upheaval, has the potential to reshape the future trajectory of Japan's financial industry. According to a report by G-Press, the Bank of Japan is contemplating abandoning its yield curve management program and instead declaring in advance the number of government bonds it intends to purchase. According to G-Press, as part of its attempts to normalize monetary policy, it would cease its program to steer benchmark 10-year government bond yields to approximately zero. If this decision is made, the central bank will make a decision about this matter and the termination of negative interest rates as soon as the next policy meeting concludes on March 19th. As a result of rising wages and consistent inflation, there is a growing expectation that the Bank of Japan will hike interest rates for the first time since 2007 as soon as this month. This is because the rationale for the policy move is being strength bond prices increased. The benchmark yield on the 10-year bond increased by 2 basis points, reaching 73 cents. Meanwhile, the yen strengthened by 2 during the period, reaching 47.6 per dollar, which was the highest weekly gain it has experienced this year. This is a significant increase from the approximately 26 probabilities that were present at the end of February. According to G-Press, the new framework will focus on the quantity of purchases rather than the business yield. While Haruhiko Kuroda was serving as governor of the Bank of Japan, the institution was responsible for putting into action the yield curve control program. The program's objective was to maintain low yields even for longer-dated bonds to encourage consumers to spend and businesses to invest in the economy. Nevertheless, the program has been subject to criticism, which includes the assertion that it rests market pricing at a time when the Bank of Japan holds more than half of the nation's government bonds, and that it diminishes the value of the yen relative to other currencies. According to the central bank, the level is now a reference point for the 10-year bond rather than a line in the sand. This shows that the central bank has already begun to relax its control on debt yields. The meeting that took place in October was attended by the central bank. Ripple's XRP has underperformed in the current spike in the cryptocurrency market and has not been able to reach the value that it reached the previous year in January 2018, with Bitcoin and Ethereum experiencing respective rises in value of 58 and 68.5 during the same period. XRP only managed to get a tiny return of 1.85 in 2024. This is in stark contrast to the substantial gains that Bitcoin and Ethereum saw. In addition, the value of XRP in comparison to Bitcoin has dropped by 88% over the past 5 years, which demonstrates the difficulty of XRP in keeping up with its equivalents and alteration in investor focus that affects XRP. The shifting emphasis of investors has been a significant contributor to this trend. Investors have been paying attention to the emergence of Bitcoin exchange-traded funds, the Bitcoin halving event, and speculation about the possibility of Ethereum spotted FS. Because of these market moves, XRP has been eclipsed, which has resulted in a significant reduction in value in comparison to Bitcoin. XRP has been unable to break past a multi-year falling trend line, which has served as a resistance since December 2017. This has been the case from a technical standpoint. Because of this resistance, numerous attempts to close above it have been unsuccessful, particularly in the year 2024. On the legal front, Ripple is currently embroiled in a protracted fight with the United States Securities and Exchange Commission (SEC), which adds to the uncertainty. This case is anticipated to continue until at least May 2024, as shown by the judicial hearings that have taken place recently. The decrease in the value of XRP in 2024 is also correlated with a decrease in the number of larger-scale investors, commonly known as. This is because the number of addresses that possess at least 100,000 XRP has decreased within the context of the market's wider rally. This indicates that investor interest in XRP is decreasing. Nevertheless, a positive scenario for one of the most significant levels of support for the ascending trend line amid the present surge in the cryptocurrency market. The price of XRP has fallen behind, and it has not been able to recoup the value that it reached at its maximum point in January 2018. It is worth noting that the price return of XRP in 2024 was only $1.85.